I'm here to cut through the noise and provide a detailed, comprehensive, and up-to-the-minute analysis of Tilray brands. The cannabis and consumer packaged goods sector is a volatile landscape, and Tilray is a company at the epicenter of both its potential and its perils. Let's delve into everything an investor is curious about and everything they absolutely need to know. The current snapshot, price, performance, and a reality check. The first thing every investor checks is the ticker. The latest live price for Tilray Brands Inc., TLRY, is hovering around the 1.15 mark, trading on the NASDAQ. This is a crucial number, but it's just a single point on a very volatile chart. To put it in perspective, the stock has traded in a wide range over the past 52 weeks, with a high of 1.95 and a low of 0.35. Recent performance tells a mixed story. Over the past month, the stock has seen a significant rally, climbing over 30%. This is a notable surge, but we must also acknowledge the broader trend. Over the past year, TLRY is down more than 38%, and over the last 5 years, it has plummeted over 80%. This historical context is vital and underscores the high-risk, high-reward nature of this investment. The company also trades on the TSX under the same ticker, TLRY, which gives it a cross-border presence. The catalysts. What's driving the recent action? The recent uptick in the stock price isn't a random event. It's fueled by several key developments, some of which are purely speculative, while others are grounded in corporate strategy. 1. The rescheduling hype. This is perhaps the most significant recent catalyst. The potential reclassification of cannabis from a Schedule I to a Schedule III drug in the United States has ignited the entire cannabis sector. This move, if it comes to pass, would be a game changer. It would remove significant regulatory hurdles, potentially ease banking restrictions, and open up the U.S. market in an unprecedented way. Tilray, with its established infrastructure and global presence, is seen as a prime beneficiary of such a policy shift. However, it is critical to remember that this is a political process, and while the momentum is strong, the outcome is not guaranteed. 2. Strategic partnerships and European expansion. Tilray is actively pursuing its international strategy. A recent partnership between its Tilray medical division and an Italian firm, FL Group SRL, is a clear signal of its commitment to expanding its European footprint. This move aims to broaden access to Tilray's medical cannabis extracts in a growing European market. This diversification strategy is an attempt to de-risk the company from over-reliance on a single market and capitalize on the global trend toward cannabis legalization. 3. Product innovation and diversification. Tilray is not just a cannabis company. It has aggressively built out a portfolio of consumer packaged goods, including craft beers, spirits, and non-alcoholic beverages. The recent launch of new hemp-derived Delta-9 THC beverages under brands like Fizzy Jane's and Happy is part of this broader strategy. The company is leveraging its existing distribution network and brand portfolio to capture new segments of the wellness and beverage markets. This is a critical move, as it provides an alternative revenue stream that is less susceptible to the regulatory roller coaster of the cannabis industry. The financial reality, a deep dive into the numbers. While the narrative and catalysts are compelling, a wise investor looks at the financial statements. The latest financial report for the fiscal fourth quarter of 2025, ending May 31, 2025, reported on July 28, 2025, provides a crucial reality check. Revenue and growth. Tilray reported a consolidated revenue of $821.3 million for the fiscal year 2025, a 4% increase year over year. This growth is primarily attributed to strategic acquisitions in the beverage sector. However, the company's revenue was impacted by strategic SKU rationalization, which affected revenue by about $35 million. On a positive note, international cannabis revenue saw a significant increase of 71% in Q4 and 19% for the fiscal year, and its Canadian cannabis business remains a market leader. Beverage net revenue also saw a healthy 19% increase for the fiscal year. Profitability and earnings. This is where the story gets more complex. Tilray reported a net loss of $1.27 billion for the quarter, a staggering increase from the previous year. This large loss is a major red flag for investors and is a key reason for the stock's volatility. The company's earnings per share, EPS, for the quarter was a positive 0.02, which is a significant beat against analyst consensus estimates of 0.03. This positive EPS, however, seems to be an outlier and doesn't tell the whole story, as the company remains largely unprofitable on an annual basis. Analyst consensus for the upcoming quarters and years still projects negative EPS, though with a trend of improvement over the long term. Balance sheet and liquidity. The balance sheet reflects the financial maneuvers of the company. Total assets stand at $2.07 billion, while total liabilities are $584.75 million. The company's cash and short-term investments are at $256.36 million. While Tilray's balance sheet is sound, the significant dilution of shareholders in the past year is a point of concern. The company's debt has been reduced, which is a positive sign for its financial health. Gross margin. A positive trend is the improvement in gross margin. The company's global cannabis gross margin increased by approximately 700 basis points in the fiscal year. This indicates that Tilray is becoming more efficient in its production and sales of cannabis products, a crucial step toward long-term profitability. The analyst verdict and future outlook. What do the professional analysts think? The consensus among analysts is a hold rating for the stock. This is a prudent, middle-of-the-road approach that reflects the inherent risks and potential rewards. The 12-month price targets vary significantly, with a high estimate of 2.08 and a low of 0.6. The average price target is around 0.93, which suggests a slight downside from the current trading price. Analysts are also forecasting a bumpy road ahead. The company is not expected to be profitable in the next 3 years. However, they do anticipate significant growth in both earnings and revenue in the coming years, with earnings projected to grow by over 100% per annum and revenue by over 4% per annum. This reflects the belief that while the short term is challenging, Tilray's long-term strategy and the potential for market expansion could eventually pay off. The risks and caveats every investor must know. As a wise advisor, I must emphasize the risks. Tilray is not a stock for the faint of heart. Regulatory uncertainty. The biggest risk is the continued uncertainty surrounding cannabis legalization in the U.S. A failure to pass meaningful federal reform could put a damper on the entire sector and reverse recent gains. Competition. The cannabis market is incredibly competitive, with numerous players vying for market share. Tilray faces stiff competition from both established players and new entrants. Share dilution. The company has a history of issuing new shares, which dilutes the value for existing shareholders. This is a common practice for growth companies seeking to raise capital, but it's a factor to be aware of. Operational unprofitability. Despite growing revenues, the company is still losing money. Achieving and sustaining profitability is the ultimate test, and Tilray has yet to prove it can do so consistently. NASDAQ listing compliance. A recent filing revealed that Tilray has received a non-compliance notice from the NASDAQ regarding its stock price. While the company has sought an extension to remedy the issue, this is a serious concern that could lead to delisting if not resolved. Conclusion and final advice. Tilray, TLRY, is a fascinating high-stakes investment. It is a company with a strong brand portfolio, a diverse revenue stream, and a strategic plan for global expansion. The potential for U.S. federal legalization is a powerful, tantalizing catalyst that could transform its fortunes. However, the company remains unprofitable. Its stock is highly volatile, and the regulatory environment is a minefield. For the risk-tolerant investor, Tilray could be a long-term play on the future of the global cannabis market. For everyone else, it is a speculative bet. My take is to approach TLRY with extreme caution. This is not a set-it-and-forget-it stock. You must stay informed, monitor the regulatory landscape, and pay close attention to the company's financial reports. The story of Tilray is far from over, but whether it's a triumph or a